Good day and welcome to 2022. I'm Ira Epstein and wow, here we are, brand new year, new events, markets crazy as can be. Is it a different event now because of COVID and everything else? The answer is not really. When you get to the first few days, and my experience has been that in the marketplace, the first few days of a year are full of volatility. When you come from a stock background, you realize a lot of new money's there to be placed. People say, okay, I want to go into this, and this in 2022. They'll pick a fund. The fund has to allocate the money. They allocate it, and it's often a roll at the end of each quarter, which we just ended, into the new year, another typical one. And then you get the traders that want to position themselves. They don't need the fund. They're going to buy their individual stocks. That moves the market just as much. Well, futures work very similar. You get people that come out of the managed accounts, big money managers. When they make their year, I speak from experience, and you get into December, they're trimming back their positions big time. They don't want to give back their bonus that they worked 12 months to get and blow it in the 12th month. Then they start redeploying what they think their position should be the very beginning of the year again. They want to get back in. Well, unfortunately, the volume's very thin then. Number two, they're running into each other because some funds hold back, others come in. It's the worst time to do anything the first few days of a new year. You might think it's great. My experience is completely different. I don't know how long you've traded. I've done it since 1969, been in this business, started on the floor as a runner. You've heard of those. They don't even have them anymore. And I used to wash the blackboards. That was, by the way, I had this new machine called a Polaroid, and we would shoot a picture, and that was the official time and sale. I was in law school doing that at the time, and just cracks me up when you think of where it's all come. But I'll do it, and I'll do it until my life ends because I love this whole trading thing. It's fun if you keep your wits about you, use money controls, and don't gamble what you can't afford to lose. It is so important to use money management at all times. When you get to the point you're lighting candles and you're wishing and hoping, it's like in Vegas. You go there, you got your last money, you throw it on the table. It's rare that that turns into the big winner, right? It's generally you're through and you're going back to your room. You know it, I know it. It's the way it works. Okay. So in looking at the markets today, violence, that's the word I want to use, okay? Especially in the metal markets and the dollar. Absolutely crazy action today. I sat back and I'm watching it, and I swear I'm not a smoker, but I've had my big cigar out and going, whoa, look at this action. This is typical of the beginning of the year. So let's go to the charts. As you can see, you made another new all-time high. Now, we're up for the week a 0.5 percentage point, up 26.5 points. If we finish like this, another new all-time high. When we come to the daily charts, no. You did not make new all-time highs. You're still in a distribution area right up here. That's what I'll call it, distribution. Back and forth swings, not really going anywhere. What's the chart pattern? There is none. You have a pattern of making a higher high and a lower low. That is not a trend. Next, I look to see what the relationship of moving averages are to price. Well, you got the 18 in red over the 100. The 100's over the 200. That's a classic bullish setup. But support's back at 47.03, 75. You round it, and that's where you'll be. Where's the resistance? The upper Bollinger Band. Don't lose faith in the idea that when you hit Bollinger Bands, you're in a resistance zone. You are. There's many ways to play with them, and I give you a master's degree if you take my enhanced Bollinger Band course. Something you should consider. In any case, so you got the higher high, lower low, no trend, bias up, and you have momentum bullish. Why bullish? Well, we cannot say that we know where today, Tuesday, as I'm recording now, the market's going to finish. So we go back to Monday. That we certainly know. Both numbers were over 80. Both over 80. Down here, the slow stochastic. Both over 80 the day before. And even the day before, let's go to Wednesday. Come on. It doesn't want to let me do that. There we come. Now it's going to let me. Tuesday, Let me come in to last Wednesday. I want to get to this. Oh, it's not good. There it goes. Okay. There's Tuesday the 28th. Both numbers not over 80. Not over 80. This is what I wanted to show you. So on Thursday, Friday, let's get back here. Thursday, not embedded. Friday, not embedded. Okay. Monday, January, today. No. For the first time, both numbers are over 80. You have an overbought market. That's what I'm trying to say here. Overbought. Got upside bias, trend down. You got a lot of nothing going on in this chart. When I come to the Dow, completely different. Notice how they're just laying there, all the numbers for days on embedded. So I think on breaks like this, you're getting the buyers nibbling now. I want to use the word nibble. This is not a week where I think you're both feet into the market. Cut your positions down, let the volume return to the market, and get some of the volatility to come out as that new money gets placed. But on pullbacks, that's what I think, and I think the trade will keep buying until the red line closes under 80 with a 79 reading or lower, looking for 36,747. If you don't know what a window envelope is, it's a deviation from the 18-day average that runs parallel, unlike the Bollinger Bands, to the 18-day average. You want to use them. This is the kind of market where you want to pay attention to them. Sometimes the market doesn't get back to that Bollinger Band, but it often gets to the window envelope. And if they're close together, that's the one you want to go in front of. I show them every morning where they're relevant in all the futures markets that I cover in 40 charts in my subscriber video. In the Russell, you haven't proven to me anything. Embedded, I'll get impressed, okay, because you're so low. But if we come back Monday, first time both numbers are over 80. So it's an overbought market, not embedded. Number two, it's trying its darn best to get up and over right here, the upper Bollinger Band. But my friends, all the other indices primarily are at their highs. This is a market that wasn't. But so many traders now think that the small caps might be the place to be for the year. They thought that last year and were wrong. That doesn't mean they'll be wrong this year. It's too soon to know. But sometimes you get the PEs, price earnings, that are too high, so the people will step to these indices because if you can find the lower ones that aren't, that's okay. The thorn in all this is generally the smaller cap companies aren't as well capitalized to handle higher interest rates than the large companies, but then we have to define what's a high interest rate. I don't think a 1.62 on a 10-year note, you got right into that zone today, is a high interest rate on a relative historical basis. So those are things you got to think about. Right now, what's the trend? I'm going to say this. Get ready for me to choke. Up, up. It is overbought, but it's in an uptrend. Target the upper Bollinger Band. It loses that if you take out this low right here of 22,031.40. But this is the first time, and I admit I'm choking on it, the market's in an uptrend. In the VIX, the market is still in a downtrend. And this morning, when I was writing my update and doing my other work, I was telling traders, I said, the VIX is telling you, and this was at 11:30 before the new highs were made on the day in the indices, I said, it is not rallying. The traders don't want insurance. Put it in my newsletter. Boom. Second part of the day, because I put that out at 11:30 or so, market took off the other way. You could be headed right here. You have an embedded reading. What did I say last week? With an embedded reading, I thought the pros would sell into this, looking to get to the lower Bollinger Band, and now I want to go on record. I think the pros will write puts if you hit 1551 to get back up here, and they'll do it with that because while the trend is down, they don't need the 100% delta. They'll choose delta that works for them if you understand options. In the 30-year bonds, the market's got lower highs, lower lows. Is the market oversold? For sure it is, okay? You've got both numbers admittedly under 20 right here, but right here, if we take a look, they're under 20, and right here, they're not. So you just have an oversold condition. Not much I can do with that one way or the other as I look at how the market is going. Then I was going to step over. I'm sorry that my phone's going there. I normally turn it off. I forgot. In the 10-year notes, well, you're under the lower Bollinger Band. You don't want to be short under lower Bollinger Bands. You want to walk away from that in the short term and just see what the market's going to do one way or the other. The resistance, as I see it, 130.16. Nothing to do because of the oversold. And in the dollar index, well, you're back to a neutral area. You have a pattern that isn't trending. You have a higher high, lower low. I said last week I thought the pros were coming out against the lower Bollinger Band. I don't think they stepped in and went long today. And I know I'm hearing so many traders say, oh, the dollar's the place to be this year. I don't know that the dollar's the place to be this year. Number one, this year just began. Okay, it's the first trading day of the year. Number two, traders are now rushing. I just saw on Market Watch, they were talking today, the way that the futures went, a 54% probability of a rate hike at the end of March. Why? Because the futures did that? But you haven't answered my question, why? I don't know that Fed Chair Powell is at the same time he ends, because he's timed his tapering, going to raise interest rates at the identical time. I don't see that. I see a man that wants to see what's going on. I do understand part of the arguments that China, with the Omicron as bad as it is, their zero tolerance policy, maybe the factory output isn't good. But that's not what the numbers came out today. The numbers, and I wrote them in my full research report, showed the exact opposite. They can produce and get goods exported. Guess what? Your supply chain issues dissipate. It's that simple. So I'm not buying all those arguments. They sound great on TV, but I'm not seeing the argument proven. In the euro, can you say any more than we are building either a phenomenal base or a top? I find it difficult to think it's a top and you're going back to the 110 level, but it can happen. And I'll be the first to jump on the bandwagon. It seems to me that the market came down enough here, and from the high 120s all the way down, it's acting. The word is acting like it's trying to bottom out. That's all that I could say about it. There is no trend. You have a lower low, higher high, but whipsaws back and forth in those Bollinger Bands. Still, I'm very much still in the British pound bull camp, have been. You got higher lows, higher highs once you cross the 18-day average and embedded. And when did we embed? Well, as you can see here, both numbers last Wednesday got over 80. The next day they did it, and the next day. So market embedded as of Friday. Today's the first trading day since then. Did the market give the pros a break? I got to tell you, it did. I think they bought that. If you take the enhanced Bollinger Band course, that's a classic setup. Win, lose, or draw. I think this was the buy zone today. You're out if the 79 reading on the close shows up in that slow stochastic. Bitcoin still looks bearish to me overall. I have the D's. I'm sorry. Can't run that. That got away from me. We have to go to the Jan. Brent versus WTI crude. Okay, you're getting a rally back where WTI is getting stronger. Now, let me see why. Oh, tomorrow's the OPEC meeting. We're going to find out if OPEC is going to go ahead with the 400,000 barrel output. You know why I think they will? Libya's lost 700,000 barrels a day. Now, it's been made up and nobody's talking about it. Venezuela hit 1 million barrels a day output. Didn't they have all the U.S. sanctions on them when they couldn't do anything? Yet here they are. Who are they selling that to? Who's taking it? Aha! Who's giving them the money? Aha! Who's our enemies? Iran and China and Russia. Well, Russia's not buying the oil, so that leaves who? Iran's trying to produce. One party, China. So China's in there buying our enemies' oil. People we're trying to sanction and stop from doing certain things. It's an interesting world right now, isn't it? It's like wondering, do the Europeans have the guts? I'm going to use that word, guts, to say to the Russians, no, we're not taking your gas anymore. You're not being fair with the Ukraine. We're not going to allow you to do it. Do you think they'll do that in the middle of winter when they don't have gas supplies? Next chapter. In the Brent, We've got higher high, lower low, but this is running today, the embedded reading. So is the market a buy on this break? Absolutely. Do I like to tell my traders to go into an OPEC meeting or a Federal Reserve meeting? No. So I give up opportunity, but there's a reason. I am human Swiss cheese. I have done everything wrong you can do in 50 years in futures, most likely, in terms of trade analysis. The one thing I learned out of it, you don't stand on a railroad track as a bullet train is rushing at you and say, I knew that, I could jump out of the way. You can't. Maybe it was 5 years ago, maybe more. I'll never forget. I took a position in the Swiss franc. And the Swiss bank, Swiss National Bank, had said, absolutely, they are not going to do something. Guaranteed it. The very next morning, they did it. $18,000 move on a futures contract. Did I have to tell people to buy or sell? No, I could have stood back because they were liars. It's really that simple. They lied. You lose confidence, but they did what they thought they should do. They snookered the market. Big move. Okay. So I don't do that. I let it come out, and then I take a look at what's going to happen. I think it'll prove you wise over the years. You know, you'll get like me, the human Swiss cheese guy. Higher high, lower low, but embedded. You're bullish on all this, okay? I'm bullish on these. All of them that are embedded, I'm bullish on, all right? But I want to get through the OPEC meeting. I don't know what they'll say or not say. Natural gas is a wild swinging market. But after this big break, I'm questioning if, like in the euro, it's starting to build a base to try to work higher from. We're in January. We have another 10 weeks of winter. I know you'll say, Ira, how you doing that count? Don't worry about it. By the time you're in March, you're already talking spring. You know that. It could be cold in April. It doesn't matter. By the time you're in March, you're there. So I do it and say, just before we get through with March, the market psychology starts swinging gears, and they say, you know, we're not going to need as much of that. The weather's breaking, blah, blah, blah. Okay, but right now, you're in that. I think it could be basing, so we have to pay attention to all that. When I take a look and try to give you the ideas, I want to be your guy at 5:30 in the morning, where I'm recording my video, and just after 6:20, right in that zone, I'm trying to put it out for you to look at. That, if you're in New York, is 7:20. If you're on the East Coast, obviously it's 4:20 in the morning, and God knows what it is everywhere in the world. But the reason I do it that way is you really don't get the first major reports of the day until 7:30, typically in the morning, the economic data that we look at, both private and government data. And you get this every day. So I want to be there ahead of it. And then I record on my Spider ETF videos, in case you're interested, after 9 o'clock, because the last reports typically come out at 9. This way I've covered it for the futures part of the Spider ETF boys that are trading and my futures traders. And the combo package gives them the other part, and you've got a lot to do. And it becomes a lot of fun. You get my written videos, you get my written updates, my videos, everything else that I can put together along with those window envelopes and these sarcasms and other things that I come out with, where I'm giving you the education that I've gotten, because there aren't a lot of guys like me out there doing this just the way that I'm doing it. All right? And you'll find that my pedigree is fairly strong. My pedigree goes back to television many years. I was the pioneer on TV, taking my show across America, at that point, the 48 states, if you will, at that point. And I had my own programs throughout the business day. We couldn't man the phones. We had that many people calling in for our offers and what we were doing. But I was interviewing all the great market analysts. And it was a ball, and I learned from them. They couldn't come on the show if they didn't talk to me about their techniques. And I'd have one-on-ones, and I've brought that to you over the years. So how do you get all this? Just go to our website. Take a free trial. What do you have to lose? Free. Go to the website, under free offers, sign up. I'm Ira. You have a good day.